In today's video, we're going to be talking about why it's possible Bitcoin could drop up to 40% around its halving event. We've seen that in the past before. So we'll be talking about previous cycles and how they can inform this current cycle that we are in at the moment. Subscribe to the channel for more videos like this in the future, and let's dive right into the video. So right now, we have to focus on these few phases because the pre-halving period right over here, this orange box, this is now a 42-day period that we have left before the pre-halving rally occurs. The pre-halving rally tends to occur 60 days before the halving. We've seen that in the past many times. A pre-halving rally tends to occur after a retracement in Bitcoin's price action, and then we see a lot of upside during this 2-month period before the halving. And then going into the halving, a few weeks around the halving event itself, we tend to see a pre-halving retrace. And after that pre-halving retrace, we see a reaccumulation period for multiple months before we see parabolic upside to new all-time highs many months after the halving. So that's in a nutshell. So if we're going to be expecting a retracement in this pre-halving period, a retrace will occur over the next 40 days or so. We saw that, of course, in 2019, 2020, but of course, I don't expect a strong drop like this because this was very much influenced by the March 2020 catalyst that was the pandemic in the world. But generally speaking, when we focus on the 40-day period before, or at least this 40-day pre-halving period, you can see that even in the 2015-2016 period, we saw reaccumulation at highs. And during that 40-day period before the pre-halving rally, you can see here, even in this reaccumulation period, we saw a downside of up to 18%. So this downside occurred still while within a reaccumulation period, a bullish structure, essentially consolidation in preparation for the next move up, but still inside this range we saw 18% downside. And when we broke out into the pre-halving rally, you can see that over the course of this pre-halving rally, we saw a lot of upside, and it did take place over the course of several weeks before transitioning into a pre-halving retrace, and this pre-halving retrace was 40% deep. And you can see that if we are to see history repeat, a minus 40% pre-halving retrace could occur in the future. But the point to mention here is that that was 2016, that was then, and this is now. So if we focus on this current cycle, really important to mention how in 2020, we saw a pre-halving retrace of 20%. So you can see in 2016, it was 40%. Pre-halving retrace in 2020 was 20%. And you can argue that this retrace right over here was only 20% because we saw a major crash in the pre-halving period. So right over here, for instance, we got a crash of approximately 63%. And then when we recovered into the pre-halving rally, we saw a pre-halving retrace of 20%. So if we focus on 2016, because we got a pre-halving rally, or at least a pre-halving retrace in this pre-halving period of 18%, then maybe later on we needed to have a stronger retrace of 40%. So it'll be very interesting to see if we get a deep retrace over these next 40 days, does that then mean that we'll have a shallower retrace around the halving event itself? And conversely, if we see a shallow retrace in this pre-halving period, does that mean we'll have a deeper retrace in the pre-halving retrace period? Those are some things to take into account, but the pre-halving retrace as a whole, historically, we only have 2 data points. We have the minus 20% retrace in 2020, and we have the 40% retrace in 2016. Of course, a big part of that retrace was a flash downside wick. So if we were to not include this outlier, and that's not necessarily a good measure when we're considering samples and using data. We shouldn't really cherry pick data and just get rid of this downside wick and treat it as an outlier and not factor it into our analysis. But if we were to do that, then maybe this would be a 30 or 25% retracement. So if we were to get rid of that wick, then maybe a 20%, 30% retrace around the pre-halving or halving event, then maybe that's something sensible to take into account. But of course, we never know what sort of downside volatility could occur in the future. So getting rid of a wick, well, we need to know that that wick exists in the 2016 period, and that wick is a result of a very emotionally turbulent moment, which is the halving event. Many people, especially in the pre-halving rally, many people buy the hype to sell the news and profit on that event. So taking this outlier out of the equation, well, that's essentially ignoring the emotionality that comes along with this event. And there's a lot of emotionality also in this reaccumulation period where we don't see price do much for a long time. For multiple months, we just consolidate, reaccumulate at highs before breaking out from that reaccumulation range and rallying to new all-time highs in the parabolic phase of the cycle. So what we have ahead is 40 days in this pre-halving period. So we only have 40 days left for a potential drop in Bitcoin's price action. It won't be a drop like the COVID crash of 63%. And if we think about 2015, 2016, a drop of 18% during this 40-day period, that would be perfectly healthy. But the point is not to necessarily say we'll get an 18% drop in this 40-day period or we'll get a 63% drop in this 40-day period. But the point to mention here is that we tend to see some sort of retrace during this time. And so if this was 63%, I'm not saying we're going to get a 63% drop in this period. The point is that we might get a retrace in some shape or form. It could be 20%, could be 18, could be maybe even 30%. Of course, this trend line right over here is quite important to keep in mind, but at the same time, it really depends when this drop would occur because this trend line is inclining, and as a result, it's going to be representing higher prices with each passing moment. So if we don't get a deep retrace in this pre-halving period, then maybe we won't touch this trend line. We could touch the trend line around the pre-halving retrace, for instance. So next 40 days will be pivotal. If we do get a retrace, it will be during this period. And it's this retrace that would enable and set price up for a pre-halving rally into the halving event. And who knows at which price point Bitcoin will perform its pre-halving retrace around the halving event before transitioning into a reaccumulation period around the post-halving period, consolidating at highs for multiple weeks, maybe even months, before finally transitioning into the post-halving parabolic rally to new all-time highs. But in the meantime, potential scope for downside in this next 40-day period, then a pre-halving rally. Really important. Many people are going to be FOMOing into this, buying the hype and selling the news, and then we'll have a shakeout in the form of this pre-halving retrace. And it's this pre-halving retrace that could be 40 to 20% deep, but it's unlikely it will be 40% deep. Anything from 20% to 30% would be a healthy correction. And if that does happen, then we know it's because of the pre-halving retrace that we tend to see across time and history. It tends to occur, and we've seen that happen in the past a few times already. So the last few retraces are still on the horizon for Bitcoin. We could have a retrace over this next 40-day period, and we could have a retrace around the pre-halving retrace, around the halving event. But then it would be consolidation into reaccumulation for a long time, and then it's going to be up-only mode after the halving, many months after the halving. So that's about it for today's video. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoyed this one, and I'll speak to you in the next one. Speak to you soon.